All right, early in the morning on a Thursday, an oil trade is setting up. The trigger is 74.48. Triggered a bit earlier, but I wasn't awake for that. So just set up this chart, set up the box. The auto trader is going to take a long trade as soon as the bar closes above the top edge with, of course, blue bars. So not going to babysit this. Just going to let the auto trader trade here. All right, so here's the long, and looking for 10 ticks in oil. All right, the trade is complete here. Oil gets its target, still extremely early. Let's see what else we can find. All right, so this is gold. The trigger is actually at 1829, but since price came close to it, you can see it here, 1829. Since price came close to it and then retreated, again, the trigger price is going to pull price action toward it. So I'm using the arbitrator here to enter early, which is one of the ways that the members of this community enter early even before the trigger actually occurs. And that is because if price is very close to the trigger, it's okay to take short trades because market is in a weaker position and the short trigger is going to pull the price down. So once again, I'm not going to just sit here. I'm going to let the arbitrator handle this trade. And here we go. Target hit. So again, it was within the rules to take an early short because this trade was qualified by the auto trader. We are looking short because we are close to the short trigger. And this is an example of how one can get into a trade early and in time be able to hold all the way until the trigger, in this case the actual trigger, is 1829. Still early in the morning, plenty of time, and as always, it is a funded account. All right, let's see what else we can get. Okay, the trigger for the NASDAQ is 12,206, came close earlier, but not quite. The bar must close above the edge for the auto trader to take a long trade. So yeah, just gonna leave the recording running here. All right, so here is a long, bar closed above the top edge, and now the auto trader is gonna handle it from here. Okay, and the NASDAQ is complete with a $100 target. So, so far, so good. And let's see what else the day brings. All right, so we will get to the trade recaps, but before then, I really wanted to take some time and talk about what makes a profitable methodology. What are some characteristics or elements of a methodology that or an approach to trading that is consistently profitable? Not in the sense that it's going to win every trade. There was nothing like that. But given the fact that there will be losing trades, how would we recognize a methodology as being a profitable methodology over time? So let me get to that first. So these trade alerts that I share with subscribers are buy and sell level for 7 futures instruments. Now let's just talk about one because otherwise it will take way too long. I happen to love the NASDAQ, but the same would apply to any futures instrument. So, for example, last night, a bit after 6 p.m., I posted that the Nasdaq was a buy at 12,206 and a sell at 12,081. All right, so one way to trade it, the most basic way, is to simply take the trigger, and that's what the account that I'm sharing with you this whole month. And there was, I think, a recording of one of such trade this morning. That approach simply takes the trigger long as it happens, or the trigger short. That's it. That's the most basic way of doing it. What I shared with traders and what they now begin to recognize is that as price approaches the buy level, these levels tend to pull the price toward them. So this attraction, if you will, starts at about the halfway point between the buying and the selling triggers. And as price approaches, it begins to accelerate toward it. So, given that idea, now a lot of the traders in the group actually take either early trades before price ever triggers, because they're recognizing that the long trigger begins to pull the price up. And so they would get in earlier. And one trader today on one contract made over 300 on this idea of an early entrance into the trade, and then he just held it until the price actually triggered. Other traders actually allow price to trigger first and then come back, because one of the characteristics of these levels that I give is that price very often comes back into the trigger area. It's a very common occurrence. If you've been watching my videos, you see that all the time. And then they take a long once the pivot is within their, let's say, risk tolerance. Now, as you know, I've been working with Randy from Blue Wave Trading, and I really wanted to introduce automation into this approach because of a few factors. First of all, it's a rule-based approach. The auto trader forces you to be a rule-based trader because that's how it takes trades. Its speed of execution is phenomenal. In fast-moving markets, there is no way I would be able to match it. And of course, its accuracy. And for lack of a better word, it's patient because it's going to wait until everything sets up the way it's supposed to take a trade. So based on this idea that when price is closer to the long trigger, I only want to take long trades. And when price moves closer to the sell trigger, I want to take only short trades. Based on this idea, Randy was nice enough to create a template in NinjaTrader 8. Now you saw me trade NinjaTrader 7, and that's my own template. Randy is far better at creating templates than I am. So he was nice enough to share with us one of his templates. And so based on this idea, I'm going to show you some of the trades that I took with NinjaTrader 8. Finally, I am trying to learn NinjaTrader 8, and then talk about how automation fits into this idea. All right, so this is the screenshot. And now I took about 12 trades today with this template, both longs and shorts, depending where price was in relation to the triggers. So the first one, as you see, right around like a bit after 10, between 10 and 10 after 10. So it would fall somewhere along here. So you see how we are very close to the trigger long. So at this point, of course, we don't know that price is going to collapse when we're over here. we are thinking longs only. And so I activated the auto trader upon retracement. And the interesting thing is, and that's just the way Randy built it, even though the blue bars here, there is no long trade, and it's a good thing, right? So, the advantage of automation, rule based. So the auto trader waits, and here now there is a qualified long trade somewhere at this time frame here, and it takes and very quickly hits $100 plus on just one contract. And this is, after all we want. A successful trader would just hunt for this $100 trade. And if you are skeptical about what's the point of 100, I have videos explaining how $100 per contract per day within 10 to 18 months of successful trading could give you substantially more. Go find that video if you don't know what I'm talking about. So this is an example of a long trade based on the fact that price is close to the long trigger. All right, now, as we get closer to 11 o'clock, over here, price is definitely now closer to the short trigger. This level starts pulling the price down. So from this point, maybe like from this point and below, we are looking for short trades. So I activated the auto trader on shorts, and this time it had to take a loss first. So again, going back to a profitable methodology, a profitable approach is still going to give you losing trades. The question is, can this methodology then recover? Or is it just if you start having losing trades, you blow your account, right? So that's the difference. In this case, first trade was a loss, second trade was a loss, but notice how fairly small these losses are. And that's Randy's work. Then a short works out and it's a beautiful winner, and then another one, and I hope you can see this, maybe if I make it a bit bigger. And then another one, and it hits the target, looks like with positive slippage of 165. So in this case, a loser first, another loser, and then boom, boom, two winners. And again, trading just one contract very quickly recovers and hits the target. All right, so here again, around 1 o'clock, so price is already below the trigger, comes and retests the trigger, which is a very common occurrence. The auto trader is set on shorts. Now, actually, I said it a bit before, but because price moved so quickly, this template has a pullback element to it, and there was no pullback here, so there was no trade taken by the auto trader. Here, finally, there is a pullback, and again, I think I should make this bigger. There is a pullback, and very quickly, it hits a target 125. Now, overall, I took 12 trades like this, activating the auto trader on longs or shorts based on where price is in relation to the buy and sell levels. But what I'm going to show you next, I think, is the most impressive thing. And that truly, I think, separates a winning approach from a losing approach. Hold on. Let me make this bigger. So I know it's tiny. I apologize because this took a while. It was something like 18 trades, I think, altogether. And I did everything right. I mean, I did, at first I was on longs only because price was closer to the long trigger at 206. So the right thing to do was to put the auto trader on longs only. And it just so happens, just the way things are, we hit a chop zone. I mean, look at this. Ugly. A chop zone. Do I have control over stuff like that? Absolutely not. Did I know we're going to hit this kind of a choppy time? Absolutely not. But we did, and the auto trader was activated on longs for the right reason. Um, and it just took a loss after a loss after a loss, a small winner, and again a loss after a loss. Then a nice winning trade, again, still on the long side. But then it became apparent, as you can see here, that price is not going back to the long trigger. It is, in fact, being pulled by the sell trigger, being pulled down. So I switched from longs only to shorts only, and then look what happened. Boom, 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 boom. Makes everything and hits its target of $115 after being down, by the way, right around 600. Now, it doesn't feel good to be down $600. Why am I even showing you this? I am showing you this because I don't care what your approach, your setup, methodology, whatever you want to call it, I don't care what it is. You're going to have times when you draw down. This is the reality of trading. I'm not showing you only the good stuff, I'm showing you everything. This is the reality of trading. Things are going great, and then you hit a choppy area or whatever, and then you take losses. And so it's down 600. But if you stick just to the idea of where is price in relation to the levels, you go to the auto trader and you, if you have to, switch from longs to shorts only. It has an amazing ability in a rule-based approach to recover completely. Now, let's be realistic. I think 18 trades, if I remember right, 18 trades. And I came out with $115. I probably spent close to $100, maybe like 90 or 85 on commissions. That's reality. So am I telling you that it's so great that you just made $25 or $30 or $35? No, that's not the point here. What I'm showing you is far more powerful. I am showing you that, at least in this case, the auto trader, after hitting tremendous chop and drawing down $600, is able to recover not by increasing contracts, changing rules, moving stops, nothing that a human would do. All right. It recovered everything and still showed a profit under the most unfavorable conditions. Unfavorable. So we had 11 trades when things were beautifully, either one and done, or maybe two or three losing trades, and then hitting a profit of 100 plus. Out of 12 trades, 11 were mostly like this, beautiful, no issue, no problem, and then this. And this is a reality, just like this is a reality. This will happen, just like this will happen. The problem with most methodologies, approaches to trading, is that when this happens, people blow their account because there is no way to recover. And that is something, that is why I'm such a great believer in combining the human and the machine, the human understanding of the market and the machine's ability to execute efficiently, consistently, and with discipline. Let's face it, as humans, very often we lack that. So so that's my discussion about methodologies that are overall consistently profitable. It is not a methodology that never takes a loss or doesn't have a drawdown. There is no such thing. Forget it. If that's what you're looking for, save yourself time. It doesn't exist. Um, but I really, and the more I'm testing this idea of combining uh, combining my posts, my levels with automation to execute it. I think from results I'm getting so far, both from myself and from the members in the channel, in the group, the results are great. And if this is something we can make work, this community is gonna be on the map. We are gonna be on the map, and I for one am very excited. So thank you for indulging me in this little discussion. Let's quickly do the recaps. All right, so the Nasdaq was a buy 12,206 or a short at 12,081. First thing in the morning, triggered on the long side a couple of times, right? Goes in, comes out, and then sold off and triggered the short side. And again, a couple of opportunities to take short trades for $100. That's all we're saying. 20 ticks, 20 ticks, a number of opportunities to get those 20 ticks. S&P was a buy at 4,018 or a sell at 39.93. So just like the Nasdaq, first triggered on the long side a couple of times to get 2 points, sold off, did not quite make it here for another attempt at the short, but broke down here definitely for more than 2 points, and currently trading right in the middle. All right, so oil was a buy at 74.48. Early in the morning, maybe you wouldn't have gotten this one unless you're in Europe. There was the long. Then it attempted to come in again, did not quite make it to the trigger here, and really, I guess, no opportunity during the United States session. Nope, just kind of stayed above the level. It happens. I mean, they tried, And if you have some of the techniques that we talk about, as far as getting in on the trades in the direction of the trigger, even though they're pullbacks, you really don't want to go against the direction of the trigger, because what this is telling you is that the market is in a stronger position. So it's much easier to be profitable when you are trading with the market as opposed to trying to fight it. All right, gold was a sell at 18.29. Again, a couple of opportunities as gold opened up, looking for 10 ticks on gold. Definitely gave you this here, and later on, again, a few opportunities here. As you see, price always tends to retest these buy and sell levels, and if you know what to look for, if you know, if you want to be on shorts only, if you want to be on longs only, as price looks like it wants to leave this area, but then nope, pulls right back in. The Dow was a long at 33,175 or a short 33.27. So again, during the US session here at the open, right up, we're looking for 20 ticks on the YM. Here, after the initial move up, it comes back to the trigger and gives you just a tiny bit of a pivot here. This is a beautiful trade right over here. Very low risk. Up we go. And then, of course, just like all the other indices, sold off, cleaned down. And what happened since? Now we're above the trigger again. So technically, again, this trigger should be trying and pull this price down until when? Until it crosses the halfway point, and then the buy trigger is going to start pulling the price up. All right, the 6E, a long at 63.80. I don't think we had a long. A short at 59.75. So the 59.75 definitely triggered. I think more than once. Yeah, look at this beauty. Comes in and goes out. I mean, I would not trade it this time really, but I'm just showing, regardless of what I would do, price does what it does. So this would be a really nice short if someone was to trade the 6E at this time. Okay, so this is it for this video. I want to hear your comments regarding the whole methodology idea that I was talking about. How would you recognize a winning methodology if you saw one, and anything that has to do with that topic, please leave me a comment. If you want to join our community, again, my email is in the description along with the website. See you guys tomorrow.